Today is November 20th, 2023, and this is your Monday market update. Last week was another big week. Actually, almost all of the real market moving action was on one day, but it was still an important week. This week's a holiday shortened week, but we'll shuffle the eco data releases, so we'll have some news to work with. Let's jump right in. Let's recap last week, and let's preview this week. Last week, Monday, started off a bit tentative, but as it waited for Tuesday's CPI news, the market pushed right through the Moody's downgrade of the outlook for the U.S. and a slight uptick in tensions in the Mideast with the U.S. carrying out airstrikes in Syria. The news wires were quiet, but we did get the New York Fed survey on inflation expectations, and they were actually down. Not the same read as the University of Michigan, which we'll get again this week. Overall, the markets were quiet. The Dow was up slightly, S&P down slightly. The NASDAQ was down about 0.25%. Tuesday was the data report. October CPI and even core CPI came in below estimates, and that was all the market needed. With that data point, the markets have pushed all the bets that the Fed is done raising rates and that we'll see cuts early in 2024. Not something I believe in, by the way, just my opinion. But please recall, when we last questioned the Fed heads, what the Fed heads were saying, it's hard to really believe what they say. I believe that they put sound bites out there to see how things are going to play out, but we know that the Fed heads are historically bad at forecasting what their moves will be. This was true in the past. It was true when they were raising rates, and I submit to you that we have to be suspect that they say they're going to hold rates higher for longer. As expected, bond yields fell, and that was all the wind that sales needed. The markets picked up most of their weekly gains on Tuesday. The Dow was up 1.5%, S&P up almost 2%, the NASDAQ was up 2.33%. Post-CPI day, otherwise known as Wednesday, initially had some carryover from Tuesday's momentum, strong Target stores earnings and outlook, and another good eco data point in PPI. We did also get some more soft landing back up in the retail sales numbers, moderating a bit, but not enough to call growth falling off a cliff. This helped Monday steady out. Dow was down 0.5%, S&P was up less than 0.25%, and the NASDAQ was up just a hair. Thursday continued to see the markets churn over the gains from Tuesday. This is notable that there was not a lot of follow-through. As you may have heard me say, in my opinion, we have moved pretty far, pretty quickly. More moderation came along in the idea of labor market, jobless, and continuing claims are rising. We also got some less than favorable news from Walmart, as well as Cisco and Palo Alto networks. So mixed all around. Treasury yields did come down a bit, and that was enough to get the markets mostly positive. The Dow was down less than 0.25%, but the S&P was up less than 0.25%, and the NASDAQ, again, just slightly on the positive side. Not to break the trend, Friday was more digestion. Stocks took all the disinflation news from the week and just turned around to end the week. 10-year yield was down, the oil bounced. Not sure if it's going to continue, but it was strong on Friday. Holiday sales should be higher, says Citigroup. One great stat I read, if you recall the past few quarters, we've listened in the conference calls for company reports, and we listened for a lot of keywords. Recession, AI. Well, inflation was one we heard a lot of until this quarter. According to FactSet, 276 companies mentioned inflation on their calls. That's the lowest number going back to Q2 of 2021. So that was also right before inflation spiked. For the day, the Dow was up just a hair, S&P up less than 0.25%, and the NASDAQ up again just a bit on the positive side. Sound like a trend. Overall, the markets had their third straight winning week. The Dow was up almost 2% on the week, S&P up 2.25%, the NASDAQ up 2.5%. Again, what do we expect this coming week? Will it be sleepy? In no particular order, we're going to get NVIDIA earnings on Tuesday. We'll also see Fed minutes from the last meeting on Tuesday. Pulling forward the University of Michigan survey from Friday to Wednesday, that will be consumer sentiment and inflation expectations. We'll also see the jobless claims pulled forward to Wednesday. Not to be forgotten, Fed heads will be represented by Barkin this week, and that's all in the schedule. PMIs will be the lone report on Friday. Friday's a short day. Market closed at 1 o'clock Eastern time. I will hope to have some post-turkey planning ideas for you on Friday. I hope. So again, just keep an eye out for that. I'll be back on Monday with the short week market update. For this week, I do want to express my gratitude to all of you. It's Thanksgiving, and I hope we can all find things to be grateful for. As we go into this week, please continue to keep the 240 plus hostages in your thoughts and prayers. This continues to be a hard time in the Middle East and even here in the United States. Have a great week.